Good morning, everyone. Yinka, good to see you.
Good morning, Professor.
Good morning, Prof.
Good morning.
Welcome.
Good morning.
Thank you.
So we are live now, starting right away. So good morning, everyone. Welcome. It's a wonderful Wednesday morning. Welcome to the Insight Generating session organized by the NESG to sweat the data that was just released by the NBS about the Nigeria's GDP. So the session is titled Extracting the Data Insight from the Rebased GDP Data. So I welcome you all to this session. With us today, we have one of our amiable board member in the person of Mr. Larry Akimbo. We have our Chief Economist, Dr. Olusegun Omisaki. We also have among us our moderator for today, who will be leading the conversation after we have our presentation, who is the person of Ms. Amaka Nwaokolo, alongside other panelists, the person of Dr. Ekundayo Meshagon. We also have in our midst today Dr. Yinka Babalola. We also have Mr. Femi Awoyemi, and expecting to see Dr. Tope Fasua. So once again, I welcome you all to this session. My name is Sadiq Olofin. I'm an economist at the NESG. So to shoot into the session proper, I would like to welcome our amiable board member in the person of Mr. Larry Akimbo to give us a welcome address. Over, Mr. Larry.
My connection is a bit patchy. Can you hear me, everyone? Good morning.
Yes, I can hear you.
Okay, thank you very much. If at any point you can't hear me, please, if you don't mind, just send me a message on this link. I think my connection might be a bit patchy. Good morning, everyone. It is with great pleasure that I welcome you to this Insight session. My name is Larry Akimbo. I'm delivering this welcome remark on behalf of the chairman of the Nigerian Economic Summit Group, Mr. Olani Yusuf. I welcome you to this Insight session, themed X-raying the Rebased GDP series in Nigeria, organized by the Research Department of the Nigerian Economic Summit Group. On behalf of the board of the NESG, I would like to thank you for joining us in this critical conversation, one that sits at the intersection of data integrity, policy effectiveness, and economic inclusion. The rebased GDP is a technical adjustment and a recalibration of how we perceive and measure the economy. The GDP series released by the National Bureau of Statistics reflects a shift in Nigeria's economic structure. This update encompasses not only the size of the Nigerian economy, but also the factors that drive it, the areas where gaps exist, and the emerging opportunities. However, it is important to note that what we do with the new data is way more important than the data itself. At the NESG, we have always maintained that credible, timely, and disaggregated data is the bedrock of good governance and investment decisions. The rebased GDP presents another opportunity to refine our macroeconomic assumptions, redesign policy instruments, and rephrase national discourse around growth, productivity, and inclusion. This insight session aims to move the conversation from statistics to strategy. We must look beyond the numbers and reflect on the broad implications for policy formulation and implementation, development financing, national planning, subnational governance, and most importantly, citizen empowerment and inclusion. We are pleased to welcome an excellent mix of thought leaders, economists, fiscal experts, capital market specialists, representatives from the organized private sector, and public administrators. Each person here brings a unique lens to this conversation, and together, I'm confident that we will extract insights that can shape practice, deepen our understanding of the series, and establish a consistent narrative, not just theory. As we look towards the Nigeria Economic Summit 31 in October and continuing implementing the 2025 macroeconomic outlook recommendations, we view this rebased GDP session as part of a broader reform agenda, as it provides a compass to understand, measure, and steer more confidently. Therefore, we must treat this rebased GDP as a strategic enabler for better governance, smarter investments, stronger public-private collaboration, and a renewed social contract between the state and its citizens. At the NESG, we remain committed to being a dialogue partner, accountability partner, connector, and intervener, with a voice of reason and a bridge between data and decisions. I thank the NESG Secretariat, our partners, panelists, and all participants for their continued commitment to national development. Let us make today's conversation count, not just in words, but in actions that move our dear country forward. I wish you all an insightful session. Thank you, and may God bless the Federal Republic of Nigeria.
Thank you very much, Mr. Larry Akimbo, for the insightful welcome address and the call to action as to what this session is supposed to cover. So thank you very much. I would like to recognize the presence of our dear CEO, the person of Dr. Tayo Adeloju. And also we have with us Professor Uche Owaleke, who is a top member of the Fiscal Reform Committee that is headed by Mr. Taiwo Yedele. We are welcome. And we have with us Dr. Joseph Ogebe, who is the head of research at the NESG. So we move next to one of the major things we are here to do today, which is to deep dive into the rebased GDP. And I welcome Dr. Faith Iyoha, an economist at the NESG, to present the deep dive for us today. Thank you. Dr. Faith, please.
Thank you very much. Let me share my screen. Can you see my screen now?
Yes, we can see your screen, Dr. Faith.
Can you see my screen?
Yes, we can.
Great.
But not yet. Yes, now in presentation mode. Yeah. Thank you.
Okay. So we're looking at the strategic insight from Nigeria rebasing GDP in the era of reforms. So the basic outline would be to, first of all, look at a brief background to GDP rebasing. Then we'll look at some of the insights that we could draw from the rebased GDP series and talk about the opportunities and implication it presents. So why is the GDP rebasing important? First, what is GDP? GDP is gross domestic product. So we know over the last 10 years, there have been evolution in economic activities, in consumption patterns, in investment patterns. And so this call for an updated version of the economic activities in the country. And essentially, the rebasing is to improve data accuracy to capture recent realities. The last rebasing was done in 2014 with 2010 as the base year, shifting the base year from 1990. The exercise in 2014 made Nigeria the largest in Africa as the size doubled or almost doubled in 2014. What are the key changes in the new GDP rebasing? One of the changes is that it shifted the base year from 2010 to 2019 to capture a period of relative stability. It also captured the informal and the formal division or divide of economic activities. New activities were added, not specifically the activities captured were more within the first 6 sectors that we previously have. The exercise seeks to capture the current realities, as I've mentioned, and in this exercise, the nominal GDP rose from 306 to 364 trillion naira from 269 trillion in the old GDP series. So using the 2010 base year, it was 269 in 2024. It moved to 364 in the same 2024. That's about 35%, 35% increase when we compare the nominal old series and new series. Now, in dollar terms, while we have seen an increase, a larger size of the economy, in dollar terms, it shows that the economy actually shrank due to the depreciation in currency. Also, we saw that the post-GDP, real GDP, only beats the pre-GDP numbers in 2023. That means essentially after the COVID, the economic activities was in depression for about 3 years. And we also saw that the difference between the new GDP series, the nominal GDP and the real GDP series corroborates the fact that inflationary pressure persists in the economy. The rebasing series, we revealed that the impact of COVID-19 was more detrimental than estimated. The previous GDP series states that COVID-19 led to a contraction of 1.9%. However, with the rebased GDP, we saw it was about 7%, approximately 7%. So it shows that the contraction was even serious than previously captured. And it also shows a slower recovery. Howbeit, this recovery is now at par with the rate at which the population is growing. So in terms of per capita income, we saw that the per capita income has gone from about 800,000 to 1.5 million, meaning the increase in the GDP has led to increase in per capita income in Naira terms. However, as a result of currency depreciation, we saw that it is even lower when we look at the dollar terms. But when you compare it, we see that it is actually relatively better compared to what the old GDP series revealed. The Nigerian industrial sector shrank in this process. So we saw that the size of the industry moved from 21% to about 16%. And it shows there's a kind of substitution effect. Activities we are moving towards services and agriculture. So the 4% difference, I think 2% moved to services, while the other 2% moved to agriculture. But when we take a closer look at the industrial sector, we see a shrinking across board as the industrial sector declined from 443 billion naira to about 35 billion naira. We also saw that informality remains a dominant feature in the Nigeria economy. So this chart is just showing informality share by broad sectoral distribution. So the first point to note is that agriculture, like we already know, is informally dominated. And meanwhile, the industrial sector has more of a formal sector than, and as well as the service sector. Now, in terms of structural concentration, we saw that it is now more concentrated in low productive sector, and this sector are also highly informal. So we see that agriculture is dominating, and agriculture is also highly informal with about 90% informality. Trade sector is also one of the sectors that dominates the distribution of real GDP, and real estate account for increased share in the new GDP rebasing. And this real estate is also an highly informal sector. Now, in terms of contribution, like previously known, the ICT and financial sector were dominant sector that drives growth. But with the new rebased GDP, it is showing that it is in admin and media and arts. So these are the dominant sectors that are that are growing. Now, in terms of the contribution by this sector, we now see aside ICT remains within this group, financial sector fall out from top 5. So we now have agriculture and real estate as the dominant sector. And this sector are highly informal sector. And this also speaks to ability to create jobs and make it more formal, because like we know, our employment is largely informally dominated, with about 93% of employment in the informal sector. Now, in terms of our performance compared to other countries, we see that we remain 4th largest in the economy. The economy is still the 4th largest. So it didn't move us to the first like the previous GDP rebasing. Now, in terms of per capita income, we see that we became 33rd out of 52 countries that were considered. So moving us from 42nd position to 33rd position in terms of per capita income. In terms of when we look at national development projections or targets, we see a slight, some changes on performance. So when you look at the real GDP, overall, we see that we are still underperforming our target. We look at agricultural targets, the growth target, across board, it's been underperforming. However, in 2022, we were able to achieve the target for the NDP. However, after that, our targets has continued to be on the lower end when we compare the actual and the target. In terms of the implication for finance and the fiscal space, we see that financial debt becomes more shallow, and this highlights the need for the current recapitalization of the financial sector. And we also see that it looks like the fiscal space becomes a bit more narrow. So when we compare this with other African countries, for example, when we look at the money supply to GDP, with Nigeria, rebased GDP, we now have about 30. But when you compare it to countries like South Africa, they are doing about 74%. In Indonesia, where they are doing about 41%, and also Brazil that's doing about 46%. Then you also look at the credit to private sector availability, access and availability of credit is about 20.6% to GDP, compared to about 90% in South Africa and about 36% in Indonesia and 75% in Brazil. So when you look at the fiscal indicator as well, specifically, I will speak more to the revenue to GDP, because fiscals, it's really important to consider the revenue mobilization ability. The rebased GDP showed that revenue to GDP is just 2.559%, which is very low compared to other countries like South Africa, that's doing about 27%, Indonesia is doing about 14%, and Brazil doing about 37%. Now, what are the implications for all this for policy? So one of the implications is there is need to quickly respond to the shrink in the industrial sector. The national industry policy is essential to ensure that we start implementing what we have documented. Then we also look at the real estate. It suggests that there's a latent demand, especially in urban housing and commercial real estate. So there's need to reform our land use acts and law. There's need for urban planning and regulation to unlock housing finance and attract capital. And we also look at the need to refocus on sectoral priorities like agriculture, and also develop a comprehensive strategy to leverage agriculture as a major comparative advantage for food security. Now, in terms of the informal sector, there's need to improve the level of formality in most of the sectors. Now, when we talk about welfare and productivity, agriculture growth was just about 1.7%. It implies that the prices of food will remain elevated, and this have consequence for the welfare of the masses. So it is important to look into improving or mechanizing the process of productivity, and also formalizing most of the activities or the players within that sector. Now, the GDP, per capita GDP shows an improvement in nominal terms and a slight contraction or a decline when we look at the dollar relationship. However, this increase in nominal terms beclouds the level of inequality and poverty that currently exists in Nigeria. So it is important to complement this data with other metrics for measuring poverty and inequality. Productivity remains structurally weak, like we said, dominantly in the informal sector. So there is need to start targeting some specific sectors for intervention to quickly unlock the opportunities that exist. And one of the ways to do that will be to improve the educational level, improve human capital development, essentially improve the skill and plug the skill mismatch between the industries. And also it is important to also unlock the energy deficits that we currently have and improve on innovation. There's also need to improve the social coverage, because the current statistics reveal that the expenditure on government expenditure is becoming, it's now lower. And as we all know that expenditure on welfare is usually on the low side. So there is need to increase social coverage. There's need to increase access to health through health insurance. There's need to increase access to quality education, and to also provide some unemployment benefits for the highly vulnerable citizens and also businesses. Now, in terms of the fiscals, there is need for a recalibration of some of the assumptions earlier made. And also, we've seen one of the major points from the highlights was a low debt to GDP ratio. Essentially, this may create some kind of illusion, some money illusion, and the assumption that there is a greater space to borrow and could lead to more borrowing. But when we now consider other metrics to financing this debt, for example, when we consider the revenue to GDP, it becomes a bit of a challenge to finance debt. So then the low debt to GDP may not be seen as something really encouraging. And it also speaks to improving efforts at mobilizing revenue. There's need to urgently mobilize revenue. There's need to implement major reforms around non-oil revenue to generate revenue. There's also need to reinforce the idea of formalization of major sector, so as to bring them into a space where they can easily be captured, and then you can be able to get a bit of revenue from them. It's also important to also digitize taxation, and it is also important to improve our spending efficiency. The spending should not just be dominated by recurrent activities or recurrent debt activities. It is important to start targeting specific sectors to improve their their performance as soon as possible. In conclusion, I'd like to say that the current GDP rebased GDP series essentially increase in the size of the economy. It's not equivalent to welfare. So it is important to take the numbers as an opportunity to recalibrate our assumptions and our thinking about the reforms process. Thank you.
Thank you very much, Dr. Faith Iyoha. What a deep engagement with the data that we just had. Just a brief summary. We saw that the economy had become bigger, but we still see that challenges persist. We have seen the economy expanded from 260 plus trillion to 360 plus trillion. It's a good fit for us, but we saw that in terms of compared to other countries, we can see that we have a lot of work to do. And in terms of welfare, we see that Nigeria has a lot of work to do, especially when you compare with other countries. Nigeria is 33rd, while 1,000, that's $1,000 compared to about 17,000 in some other countries like Seychelles and Mauritius and the others. So the data gives us the opportunity to recalibrate, as Dr. Faith mentioned, to recalibrate our policy environment to see what we can do better, and then push the country to the next level. Thank you very much, Dr. Faith, for the presentation. I'll move next to the panel session, and I'd like to welcome Ms. Amaka Nwaokolo to take us through the panel session. Ms. Amaka, over to you.
Good morning, everyone. Thank you, Sadiq. And welcome to everyone on the call. Thank you for joining us today. I'm very delighted to, be welcoming you to the conversation on. I apologize. Okay, I'm very delighted to be welcoming you to the conversation today on insights from the rebased GDP data. We've heard a lot just in terms of the data, like Dr. Faith Iyoha has shared. But then, as we all know, GDP rebasing isn't just a statistical exercise, as it were. It really is a recalibration of our economic story. From the data we have heard, we can see that we now have a clearer picture. We have a more up-to-date lens, so to speak, through which we can better understand the composition, the size, the structure of our economy. From the data that Dr. Iyoha has also shared, we see that there's fresh data on how we view sectors like services, technology, informal trade or the informal sector, and even the creative sectors. But beyond the headlines, beyond the percentage changes, the conversation for us today is really about what this new data means for policymakers, for investors, for entrepreneurs, for everyday Nigerians like you and I. So for example, what sectors are driving growth? And like Dr. Iyoha mentioned, you have agriculture just playing a very dominant role, but what are the other sectors? What sectors are underperforming? Are there still gaps when it comes to our measurement system? And more importantly, how do we use this new data and insights? How can this new information inform or better inform policy design, smarter choices when it comes to investment, and overall drive inclusive growth in Nigeria? So these are some questions that really come to mind as you think about the GDP rebasing in Nigeria. And thankfully, I have a panel of experts. They're economists, you would hear as I begin to introduce them, and they're specialized in different fields, but that relates to this conversation today. So I would encourage you to engage. Please send us your questions. Please drop your comments. There's a whole section on the agenda that's carefully or specifically dedicated to answering questions and providing answers. So please send questions. Please send us your comments as well. I will do the best I can to take as many as I can within the time that I have. So that said, I will jump right in and introduce my panel speakers. and then commence the conversation. So welcome again and get ready to engage. Okay, so starting off, I would introduce my first speaker, Dr. Ekundayo Meshagun. Dr. Ekundayo Meshagun is a senior faculty, School of Management and Social Sciences at the Pan-Atlantic University. He's also a specialist in macroeconomics and fiscal policy. I know we have his bio on the screen as we're seeing this. One thing I can pull out and definitely emphasize is that this is a thoroughbred academic. So we look forward to engaging him and receiving his responses and insights on the conversation today. Very quickly, I would move over to the lady that I have on the panel, Dr. Yinka Babalola. Dr. Yinka is a country director, Nigeria International Budget Partnership. She's a specialist in fiscal justice, inclusive budgeting, budget transparency, and public accountability. Welcome, Dr. Yinka Babalola. There you have her bio on the screen. Coming up next, I will now introduce Mr. Olufemi Awoyemi. Mr. Olufemi Awoyemi is the CEO of ProShare. He's an expert in capital markets, financial analysis, and business intelligence. Okay, so again, you have Mr. Awoyemi's bio on the screen just to see the caliber of experts we have on the panel today. And last but not least, I have Dr. Tope Fasua. Now, Dr. Tope is a special advisor to the president on economic affairs. He's an expert in financial markets, entrepreneurship, and public policy. Distinguished panelists, thank you for joining me this morning and welcome on board, everybody. And so starting off the conversation, I would bring up Dr. Meshagun. So Dr. Meshagun, we've heard the data as presented by Dr. Faith Iyoha. So we have preliminary data, so to speak, of what is happening or what the GDP rebasing really means, right? But from your perspective, what implications do you think the rebased GDP has for Nigeria's development planning, sectoral priorities, for example, and the country's broader economic transformation agenda? I know that Nigeria is working with an agenda or a target of building a $1 trillion economy by 2030. Is that feasible with this new data and insights that we have? What do you think, Dr. Meshagun?
Thank you very much, Amaka. And we've seen what Dr. Faith has presented, and it is actually what the data is today. That after the rebasing, we are still having something that is not too, too different from where we used to be in terms of per capita income, in terms of every other thing. We have seen some other slight improvements here and there, especially when it comes to the aspect of a debt to GDP ratio and things like that. But there are also some other cautiousness in the area of revenue and things like that. Now, the implication of this rebased GDP, I want to take it from that another angle, is that why we have to be cautious, why we have to say, oh, we are not still doing well, we are not where we want to be. But we can see that changing of base has given us a marginal increase in terms of data. Take for instance, we talk about per capita income moving from about $800 to about $1,000. Although that is when you consider equal spread of welfare or income per capita. But that is also something marginal. And we've also looked at the value rising to about 372 trillion naira and all that in nominal terms. What it means is that the computation of the rebased data is a bit more expansive now because we then have other sectors, other activities that are being brought into the other sectors that are included in the data. Now, it gives us a more diversified GDP going forward, unlike what we used to have before. So for our developmental plans now, I've been involved in drafting developmental plan for the country before, and I know effort that goes into it. So when we are talking about development plans, it gives us a more broader look now in terms of computation of the GDP. Take, for instance, you are talking about bringing in activities, enhancing more activities in the real estate, ICT, entertainment, and things like that. All of this other, bringing this, including these other sectors in the rebased data, give Nigeria a kind of platform to build on in order to be able to implement sectoral specific targets. Sector specific interventions can then come from the authorities, whether the fiscal authority or the monetary authority. That's the angle I'm looking at it now. So in terms of our broader developmental plans, it gives scholars and experts opportunities to then be more robust in coming up with development plans. The central bank, Ministry of Finance can now also begin to align fiscal and monetary policies. Like Dr. Faith has said, that it gives us opportunities to recalibrate our policies. So the monetary authority, the fiscal authority can now begin to look at how they can align fiscal and monetary policies to accommodate all these other sectors. And also, let us be mindful also that these sectors are directly affect the common man. Take, for instance, talk about ICT. I have so many youths today that are going into tech. Everybody is doing startups, tech startups and things like that. So by the time government is now able to then direct policies at those priority areas, priority sectors that directly affect these younger ones, I think going forward from the medium to the long term, I think it's going to be good for Nigeria. Today, we might be cautious, but I think it helps us to now be able to come up with sector-specific interventions that can help in terms of credit policies. What kind of credit policies do we design for these sectors? In terms of tax incentives, okay, that we can give to these upcoming sectors and then give us a more robust and a more diversified GDP going forward. Thank you.
Thank you. Thank you very much, Dr. Meshagan. So I hear you in terms of the government having clarity. So government and all other actors really within the space having clarity around sectors to focus on and designing sector-specific interventions that can drive the growth of those sectors. So thank you for sharing that. I liked what you said around a lot of these sectors impact on the common man. And so that brings me to my next question, right? So when you look at the numbers, especially as Dr. Faith shared and reeled them out, you see that it seems that we're doing well, but then there are also concerns and there are also some gaps, especially when it comes to how this impacts the person on the streets. So from your own perspective, how do you think the rebased GDP impacts on poverty reduction, job creation, for example, and just inclusive growth generally in Nigeria?
All right, thank you very much. Now, in terms of job creation and things like that, what I can say is that when you talk about poverty, per capita income has grown from about $800 to about $1,000. You can say, oh yes, I think on the average we are doing fine. Not that we are doing fine. We have marginally improved, but it has not touched the people because it's like you having a situation of happy statistics, but unhappy people. That is what we have. But like I said earlier, going forward, again gives us opportunity. Take, for instance, to be able to include, the inclusion of informal sectors like the real estate, which is now number 3 in terms of contribution to GDP, doing about 10.78% of GDP and things like that, makes it very, very important, make it very informative for the government to be able to target these sectors that affect us directly. Look at the real estate sector. Look at the entertainment sector. A lot of people are going into the entertainment sector now. You have so many bloggers. You have so many artists here and there and things like that. The entertainment sector is booming. Before, we often neglected these areas. It then gives government the opportunity to begin to look at it that, with a more diversified GDP now, GDP structure, we are going now to have this specific target, this specific policy targeted at the entertainment sector. How can we bring more youth on board and empower them through this area? And by the time government begin to look at that, not only government, other key stakeholders, And by the time they start looking at these areas, it then puts more money in the pocket of these people. It then helps them to now even become, as economists, we have what is called underground economy. All our underground economy have often been neglected. You don't see policies being targeted at we call them the SMEs. Most of the SMEs, underground economy and things like that are often neglected. It's always the organized private sectors. But now with the new GDP, I am happy that government is now more focused to now begin to see how we can grow, not from top to bottom, but from bottom to top. So it's a bottom-up approach that government needs to then start using. And I think if government can target it and do it better, you are going to see that people are going to start getting money. Now, people say there is hunger. You know, there's hunger in the land. I think power, people say they are hungry. But by the time government start looking at this critical micro segment of the society in terms of sectors and target them, give them incentives. Thank God for the new tax bills. The tax bill that is already excluding somebody, a firm earning less than 50 million per annum from tax. And that's what's going to happen going forward. Maybe government can also do more for those other people that are at the lower end. And to be able to do that is going to improve the fiscal space. Fiscal space will improve. The better sectorial data will come forward, because it will help us, more people to come on board and they see themselves as being part of what? Of the inclusiveness of our GDP. Targeted social programs, expansion of financial inclusions, and a lot of other, in terms of even poverty mapping, it's going to help government to be able to refine poverty mapping and then help to achieve our transformation agenda. Thank you.
Thank you. Thank you very much, Dr. Meshagan. So in summary, now we have data that the government and other actors within the space can use to better understand where the poverty gaps are and design interventions to directly address them and hopefully directly impact the common man on the street. So right now, Dr. Meshagan, the average Nigerian is not essentially richer than we were before, right? If I'm getting that correctly.
Yes.
Okay, so thank you very much. Now, speaking about fiscal space, I'm going to bring in my lady on the panel, Dr. Yinka Babalola. And when Dr. Faith was presenting, she said something about debt to GDP ratio. Again, just understanding that, Nigeria's debt position isn't exactly a fun position, right? And she said the debt to GDP ratio may create an illusion of greater fiscal space and could encourage borrowing. Now, my question to you would be, from your perspective, what do you think? When you think of the upward revision of the GDP, does this give Nigeria more fiscal space? Do we agree with the data that has been shared, or does it risk masking fiscal vulnerabilities like debt service pressure?
Yeah, thank you so much, Amaka, and thank you to NESG for convening this panel discussion and for inviting me to participate. Dr. Faith kind of stole the thunder a little with her excellent presentation. The thing is, rebased GDP numbers, they tell us more about our economy, the fact that it's larger in nominal terms in 2024 by 34.5%. But it hasn't changed people's circumstances from one day to the next, right? It doesn't change the amount of money people have in their bank accounts. Neither does it change the amount of revenues that government has available to spend. Now, before I answer your question, I just need to address a fundamental point about statistical measures and indicators like GDP. They're a type of heuristic for measuring phenomena that are difficult to measure or quantify, okay? I always tell people that unless we conduct a census, every statistical measure is an estimate, okay? It just gives us a way for modeling reality, but it's not capturing reality in full. But many times, economists and social scientists especially, we get carried away, and then we begin to assume that these measures and models represent reality. There's nothing wrong with them. We need them. We're talking about complex systems, but we should never mistake the map for the territory, right? These are maps. They do not represent the full territory. So GDP itself is an estimation of reality, And I think Mr. Meshogo mentioned that, we have to use other indicators as well to give us a fuller picture, both qualitative and quantitative. Now, talking about whether the rebased GDP has created additional fiscal space. No, it has not. The only way Nigeria can actually create more fiscal space is by increasing our net revenues, reducing our net expenditures, or increasing the financing of our fiscal deficit by borrowing more domestically or externally. Rebasing GDP doesn't do this. We have some metrics, of course, which are measured as are interpreted as a share of total GDP. And actually, now that our GDP is larger in nominal Naira terms, like Dr. Faith said, it can create the illusion that, for example, our fiscal deficit as a share of GDP is smaller. And for the federal government, you know that the Fiscal Responsibility Act 2007 says that governments can borrow up to 3% of GDP, right? So if we have a smaller ratio, we can assume that gives us bigger room to borrow. But it's an illusion because reality will catch up with us either way. Other variables have not changed, even if GDP has changed. So for example, debt service as a share of revenue, it remains the same. And so if we try to borrow more, we have to pay more to service that debt. And that puts us in a very difficult situation. And unless we generate more revenues through increased economic activity, by improving tax efficiency and collection, we can't actually create that additional fiscal space. So for the woman on the street, this talk of rebased GDP is of little relevance to her. It doesn't put more money in her pocket. It doesn't make agricultural inputs for her farm cheaper. It doesn't improve her primary healthcare center so she can get better services. Unless there's a concerted effort, our rebased GDP, which also is limited in what it covers, it will undervalue maybe the work she does in raising her children at home, in taking care of her home, in being an unpaid carer, for members of her family that are ill, because GDP doesn't really take care of unpaid care work. And this is an issue that we have been raising over and over again that hasn't been addressed. So higher nominal GDP alone is not sufficient. It doesn't address issues of inequality, for example, the gap between the incomes of low-income earners in the community and those who are able to tap into patronage networks to earn more, which is how we know a lot of high net worth individuals in our country are able to generate high income. So it says nothing about inequality, our socioeconomic indicators on health and education and other data points that we use to assess the welfare of the population. So in conclusion on this particular question, I feel that we need to recognize the limitations of GDP. It does not fully capture the picture of all economic activities, but it's a way to look at, to be able to assess that, but we have to recognize the limitations and consider it in relationship with other data, especially like qualitative macro level information that tells us how people are living. And like I said before, the only way we can actually create more fiscal room is through a combination of a growth in revenues, rationalization of expenditures, or increased government borrowing. Thank you.
Thank you. Thank you so much, Dr. Babalala. And thank you for particularly emphasizing that GDP, whilst it's a good yardstick to sort of understand what is happening, it doesn't give the full picture. I liked when you mentioned and stressed or emphasized unpaid care, the inequalities that also exist within the economy. It also does not capture that. And then I liked your also very direct question. We do not have fiscal room. The only thing that's going to give us fiscal room is working very intentionally at revenue generation and reducing our spending. And so I think that brings me to my next question. And so with the data that we have now, and just building on your response, how should this influence Nigeria's fiscal planning framework? How should governments be thinking about this going forward, especially in terms of revenue mobilization and equitable allocation of public resources? How should the government be thinking about this?
Yeah, so, like I said, revenues as a share of GDP are now smaller. It also came out in Dr. Faith's presentation, although I'm sure some people will debate the actual numbers, but it's low. Like, government has set a target of reaching 18% tax to GDP in 3 years. So that means that we actually have to do more work. And like I said, to achieve an increase in revenues, we have to actually increase economic activity. So the GDP rebasing has showed us that in 2024, this is where we were. Our tax revenue numbers remain the same, but to increase that, we have to do more work, right? So we don't just get higher revenues just because we rebased GDP. And so that means that we need to improve tax administration, efficiency, collection, and most importantly, ensure everyone pays their fair share of taxes. So I don't want us to assume that because I'm saying we need to increase these revenues, then we just increase tax rates nilly-willy. We tend to go for the low-hanging fruits of increasing rates. So for example, increasing VAT, which thankfully has been put on hold. But then there are other tax categories that affect maybe high net worth individuals and larger corporations who mostly are not paying their fair share of taxes. So we have property taxes. So we should look at new tax categories, and we should look at creating a framework for managing our tax expenditures properly. And I'm glad that the Presidential Committee on Fiscal Policy and Tax Reforms understands this and is creating a framework for an equitable and just tax framework in Nigeria going forward. And we have the tax equity program at International Budget Partnership where we address this, and we continue to engage with the committee to provide support to achieve this. I have to say that, look, for the size of its population, Nigeria's revenues are low and our government spending is also low, right? But yet we know that just increasing the level of spending is not the silver bullet. Sorry, I'm going to plug my organization quite a bit in this, but this is because this is what we do. This is our area of specialization. So we have a program that builds CSO capacity to understand and advocate budget credibility and elimination of PFM bottlenecks. And we know in Nigeria that many times, even when funds are increased, a lot of times at the end of the fiscal year, MDAs return money back to the treasury because they are unable to spend for a variety of reasons, including the capacity to actually push that money out. So we look at how credible the budget is, how much spending deviates from the approved budget, and how we're making adjustments over time to reflect the fact that we're not either able to meet our revenue targets or able to spend as we have planned. And so if we also look further, the quality of spending is a problem as well. It's not just the level of spending. Anytime I hear about a new infrastructure project, I shudder, honestly. And why? Because we don't make provision for the continuous maintenance of these projects, right? We build all these white elephant projects and then they decay. And then a couple of years down the line, we're talking about renovating, rebuilding, restructuring over and over again. Meanwhile, if you check, other countries probably built that type of infrastructure the same time we built them, but through constant maintenance, they're still working the way they should. And so, this brings me to our procurement systems and procedures. We don't always follow open contracting guidelines. There's little transparency, accessibility, comprehensiveness of the information, and timeliness as well, because that's also important. So I've tried to address all the things that, go into creating a fiscal planning framework, the revenues, the expenditure itself, from the preparation of the budget to the activities involved in spending that money. We also need to look at the audit as well at the end of the process. Are audit systems working properly? Do they function properly? No. And so GDP is not enough to tell us about how these resources should be allocated. Dr. Faith mentioned GDP per capita, a very poor measure for telling us of how these resources are distributed across the economy because it's just a simple average. We need other data points to answer these questions, and we need to involve citizens in how these decisions are made. I think that's the last point I want to make. citizens must be involved. Information must be made available to them in a timely manner. There must be true public participation, not just make announcements the day before to ask them to come and engage in a discussion about the budget of which they don't have any information. You know, government is there to serve the citizens. I think we talk about this all the time. It doesn't sink in. It requires a mindset shift. You know, government has been put in that place to serve the citizens. So you need to ask the citizens, what exactly do you need to make your lives better? So you have to involve them. They have to participate in the process. You have to make information available to them, increase transparency, right? And then, of course, I've talked about oversight, legislative and audit oversight. So at IBP, we track all this through our open budget survey. We're in the process of scoring the one for 2025. We will release the results next year. I hope things improve. I cannot say right now, but one last point. I think this is the second time I'm saying the last point, forgive me. Citizens can engage. At IBP, we support community-based organizations to actually improve their understanding of the budget so that they can have discussions with stakeholders, with government policy makers, and be able to engage with them even on the technical matters of the budget. But then it's also government's responsibility to make the budget more open and accessible. Stop hiding behind, all these opaque terms that nobody really understands. And you'll be surprised, once that information is simplified for people at the grassroots, they're able to engage. Through our Spark program, we've seen them actually sit together with policymakers to give input into the budget preparation implementation process as well. They've been able to come up with charters of demands to say these are the things we need in our specific communities. They've been able to hold government to account, but there's only so much we can do. It's actually government's responsibility, and everybody needs to pile into this. Thank you very much.
Thank you. Thank you so much, Dr. Babalola. I thought that felt like a masterclass, but I would emphasize your last points, which really horns in on why we have government in power. So government is empowered to serve the citizens, and the citizens need to be involved and carried along. I think that was a powerful reminder that you concluded your points with, and I hope that sits with all of us. I like that you also mentioned that citizens can engage, and you have channels and platforms, I think, at your organization that can enable this happen within local communities. So hopefully we have people on the call who will look forward or who can engage with those platforms that you have mentioned. But thank you very much again for your response. Now I will shift the conversation to an investor perspective. We've talked about, the budgetary perspective. We've talked about what the implications are. But now let's look at it from an investment standpoint. And I would like to bring up Mr. Olufemi Aweyemi here. And my question to you would be around, how would the rebased GDP data that we have now shape or reshape or influence investor perception? Especially concerning high-growth sectors like, the tech sector, creative industries, and the informal sector that was mentioned when Dr. Faith was presenting.
Thank you very much. I want to thank the NESG for inviting Mr. Aweyemi. For those who know Mr. Aweyemi, I am not Mr. Aweyemi. Unfortunately, he's in transit, so he's not been able to join the call. My name is Teslim Shitabe. I'm the Chief Economist and the Director of Research, ProShare Nigeria Limited. Thank you for your question. It is a very relevant question, and it's a very timely one too. Now, one of the basic problems we have from the market perspective is that there seems to be a misalignment between government actions and policies broadly and GDP and the capital market. Now, just to take it like this, if you look at the structure of the NGX, the primary market for trading in equities, you find that there's very little alignment between it and the structure of the economy. in looking at the data presented by Dr. Faith, we've seen a large proportion of the Nigerian GDP attributable to agriculture. But when you look at the market capitalization of agricultural stocks in the NGX, that's the primary equity market in Nigeria, it's virtually non-existent. There is no agricultural company in the prime segment of the market. The ones that are there only recently started to show some positive growth. We're talking about companies like Okomu, we're talking about Presco, and we're also talking about Olam that is not listed in the market. Olam seems to be doing quite well, Presco seems to be doing quite well, but there is no basic alignment between our GDP numbers and the various segments of the capital markets, the NGX in particular. That for us is a concern. It's a significant concern. In other countries, you tend to see an alignment between the growth of companies in the capital market as well as the economy. So in the United States of America, you're seeing technology companies doing very well in the economy broadly, and you're also seeing those companies doing very well when it comes to such companies as NVIDIA, for example, Tesla, for example. You see them doing very well in the capital market. That doesn't seem to be occurring in Nigeria. And that is a realignment that we need to take seriously. And why should we do that? It's very simple. I've listened carefully to Dr. Babalala, and she's made a brilliant exposition. I've listened to Dr. Meshagan. He has made a brilliant exposition. And I want to thank Dr. Iyoha for the brilliant introductory presentation. However, in all these presentations, what we see is talking about income and expenditure. Income and expenditure are fiscal functions. But what Nigeria really needs is long-term capital to be able to grow this GDP. Long-term capital is basically the activities that occur in the capital market and not necessarily in the fiscal spaces of income and expenditures and taxations. This still concentrates the idea of governance to those revenues and expenditures, taxes and expenditures. We need to get beyond that point. Those countries that have grown rapidly, including countries like China, have ensured that they've been able to mobilize foreign direct investment into their economies and expand and grow those economies massively. 30 to 35 years ago, Nigeria, in terms of FDI, foreign direct investment, was at the same level as China. Today, China does $80 billion in foreign direct investment at the minimum. India has even gone one up on China. And we're looking at between $100 and $120 billion in direct foreign investment over the last 5 years. What that tells us is that if we're going to grow this GDP, and I agree with those who feel that GDP is mainly a heuristic figure. It's not really a proper representation of the total output that a country produces, but fine enough. Let's take it as that is what it is. And we need to grow it. How do we do that? It isn't by budgets per se. Yes, budgets will be fine in terms of managing the treasury and all that. But if we want to grow the Nigerian economy and grow the GDP, at our firm, one of the things we feel is critical is to mobilize both domestic and foreign investment using the capital market. That we have not done very well. As we speak today, there's absolutely no government entity listed on the NGX or in any other capital market platform in Nigeria. That's worrisome, because we would have expected that companies like the NNPC, for example, and many others would actually be listed so that we generate value and we understand the size of these entities and we create a market for the trading of the securities in these entities, which will also translate into transparency and the growth of the Nigerian economy. And our GDP will grow pretty fast if we can get that done. Beyond that, one of the things that we've done in ProShare is to say this. Yes, it's beautiful to have 46 sectors in the economy. But most importantly is, how do these sectors interrelate with one another? How do these sectors provide value chain support that will grow this GDP we are talking about? So one of the things we've done is to say that, you know what, let's just break the economy, these 46 sectors, into 14 sub-economies and see how these sub-economies could, in and of themselves, provide the necessary drivers for a faster paced GDP. Currently, the GDP is, in dollar terms, is about $244 billion. before the rebasing, it was $188 billion. Really and truly, Nigeria should be a country that is doing about 5 times that. And I think that actually was what informed the government's concept of a $1 trillion economy by 2030. Is it an impossible task? No. Is it a difficult task? Yes, certainly. It's going to take a lot to be able to do that. We're going to have to grow in the upper double digits if we're going to achieve that based on the $244 billion size of the GDP today. I think that's my early thoughts on the question that you asked. Any follow-up questions, I perhaps will expand on these. Thank you.
Yes, so thank you so much, Mr. Shitabe. I think I was drawn into your, response as you were addressing some of these gaps. And I think a major thing stands out for me, just from your response, because you have talked about the little alignment, in fact, little or zero alignment that we have with the capital market, and how the capital market can just be a strong avenue, to drive GDP growth by mobilizing domestic and foreign direct investment. And so that brings me to my next question, Mr. Is it Mr. or Doctor now?
No,
is it Mr. or
fine.
Doctor? Mr. Okay.
Mr.
So okay. So my next question would be, how do we? You have mentioned the gap. For me, it's how do we now be now into asset allocation and risk modeling frameworks, for example, and then ultimately begin to contribute to bridging this gap that you've mentioned.
Okay, thank you very much. A very useful and brilliant question, I must say. Now, look at it from this perspective. I said earlier that the federal government has a large number of assets, what we call in ProShare idle assets. Now, some of them are not idle, some of them are actually active assets, but none of them has been able to come to a market where you can establish market value. So for those who are operators in the market, they're looking at, okay, how do we value these kind of assets? How do we make these assets such that we can attract investors to want to come and invest in these markets? I'll give you an example that is quite simple, a simple example. We have a state in Nigeria, it's one of the smallest states in the country, but it has prime property. Upon that prime property, we have federal assets that are lying idle. And for us, we're saying, look, why should these assets lie idle? Why can't some of these assets, for instance, even be repurposed? We have military barracks and police posts on prime property along seashore lines that could generate fantastic amounts of income for the federal government. So we're saying that let's have an asset register. When we have established this asset register, we create what we call a deal room, which is what they've done in India. They've done it in China, and they've done it in Indonesia, done it in Malaysia. We're not reinventing the wheel. People get to know what assets are available for sale, what assets are available for us to invest in. So the National Stadium Surulere, can we invest in it? The National Theatre, can we invest in it? The one in Abuja, the one, all of it, any such institution across the federation, can we invest? How do we invest? So we provide that roadmap for how you can come and invest. First and foremost, establish the nature of those various assets. Place them in a deal room and start trying to establish what market values can be generated from those deal rooms. And one of the problems, I think it was Dr. Fasua, who fortunately is on this call, pointed out was that it's very difficult for you to want to sell public assets. And I agree with this. We agree with this in ProShare totally. So we're not saying sell. What we are saying is that simply take the Aramco model in Saudi Arabia. 3%, make it available for investment. 3% of the total entity. But that 3% creates a value that is known, and we know that this is the market value of this entity. We can therefore say that, well, based on this market value, can we leverage that value to be able to generate investable funds? Yes, we can. It's equity. The problem we've had so far is we've complained about debt, which I think is a problem. The DSR, the debt service ratio to revenues, are fairly high. Yes, they're much lower than they were at a point in time when they were over 80%, but it's still around 60%. We're not too comfortable with that figure, quite honestly, because we think that we don't need really to keep borrowing. What we could do is to leverage equity And if we leverage equity, we grow the capital market. Capital market operators begin to identify opportunities within the market that the government can take advantage of. That's one major thing. And one of the good things about that is, for instance, a municipal bond. The last time a municipal bond was issued in Nigeria was in Lagos State. And that was over 40 years ago. No local government, no community development area, nobody at that local level has been able to generate massive capital mobilization through the capital market. And we're saying that there needs to be a rethinking of our financial model. We don't need to just look at the incomes, what the accountants would call an income statement, revenue, expenditure. Let's look at the balance sheet and see whether we can leverage that balance sheet for the purposes of generating cash flows that can create jobs, that can also create market value that all Nigerians can be a participant in. Because once some of these, if I take 3% of NNPC and I make it available for Nigerians, it becomes it's still a Nigerian asset, but it is in the hands of Nigerians. They feel a sense of ownership. They will protect the pipeline because they generate income by way of dividends from those pipelines, from those assets being used. But if I don't have any emotional entitlement to the cash flows from that asset, I will obviously I will definitely just ignore the asset and say that, well, it's them. To use the Nigerian expression, it's theirs. Let them do what they will with it. But when we see citizens own those assets jointly with the authorities, then there becomes a greater commitment to the nation, its assets, and as well as the financial trading environment. So I hope I've answered your question in short.
You absolutely have. So thank you so much, Mr. Tope. And I think that you've given us food for thought in terms of just how we view collaboration between the government and Nigerian citizens when it comes to assets, and through that process generating funds and revenue for the government. So I'm going to bring up a government representative and to just hear what the government is also thinking in this regard. You have shared some important nuggets, and I think one that also really struck me rather was the fact that we don't need to continue borrowing, so I think that that's an important point to note. And so I would bring up Dr. Tope Fasua. I hope I have him here. Okay, there we go.
I'm here. Good morning.
Okay. Good morning, Dr. Fasua. Thank you so much for being here. So we've had the very passionate response from Mr. Tope on just how we don't, as a people and as a government, we don't need to continue to tour the path of borrowing if only we can look inwards and, in a way, just utilize our money markets a bit more efficiently to raise some of the revenue and the funds that we need. What would be your response to that? How would you say government is thinking about this, if government is already thinking about it, and what would be your general position on that?
Okay, I'll answer that one quickly, but I also have some broad comments about the rebasing. So, but like Dr. Tope mentioned, I'd already responded to that in a different forum. And of course, the issue was why not, if not? And however, that by the time you mainstream that kind of policy, you should be ready for a lot of pushback from the National Assembly, because the way politicians think about such issues are different. And someone would say, what right do you have to sell outrightly the assets of government, for example? Because I'm aware of some of these new ideas that are coming from the likes of ProShare, from Dr. Teriba and co. But already they are in play. Because if you live in Lagos, if you look at what used to be Falamo Police Station, has now been broken down, and I think there's been some sale or something, some transaction has happened, and some new developments are coming up on it. And I think they also gave some shares, or rather some part of whatever the new thing they will build, to the policemen that were living there before. So that's the way to go. However, I also saw activists, Nigerians, who went to that location to start doing videos of the demolition and making all sorts of allegations. Anyway, I mean, the truth is also that it's normal. It is the interaction of all of those several forces that lead to the development and the progress of a country. So we can't afford to, you can't get it all. You get some and move on. That's what governance is about. However, please, I'd like to make some comments, or should I pause for now?
Yes, please. So I wanted to just build on your response. Thank you for sharing that, but also build on your response to say, now that we have this data in, how does it align with the current administration's economic reform agenda, which we know is at play, and just national planning priorities, and then on the back of that, you might want to also add, to say, what are some of the complementary reforms, whether it's fiscal, monetary, or even institutional. There's a growing conversation around Nigeria needs institutions that are strong to be able to drive reforms, right? And so whilst on the one hand, government might have economic reform agenda and plans, I think the question is, how does that align with the new data that we're seeing? And then what are some complementary reforms, especially when we're talking about fiscal, monetary, and institutional, that need to go hand in hand with the plan and rebasing that has been done?
Thank you very much. That's a good question. So that gives me an opportunity to look at. So I'd like to create a sort of background to my response in terms of the policies of government, the reforms, and the vision of government. From this rebasing, we're now up to 373 trillion naira. Of course, our goal is to promote industrialization and value addition to whatever it is that comes out of Nigeria. The first thing I wanted to note about that rebasing is that it came 11 years after the first one, and 6 years after it ought to have come out in 2019. I want to use this as an opportunity to appeal to the Bureau for Statistics, who, though, oh, sorry, I need to mute that, just a second. Okay, sorry, I'm back
everything
now.
Okay?
Back now. Sorry, I'm back now. So
Okay.
the first thing I wanted to note was that it came 6 years after it ought to have come. And so we want to appeal to the Bureau for Statistics as an independent organization that, we needn't have such a lacuna in terms of data, because it also speaks to how serious we take data. So we're hoping that maybe the next rebasing will be really spot on, maybe on the 5th year, as recommended by the UN, the World Bank, and so on, rather than have such a long delay. And also, very importantly, to say that whereas we have rebased now, but it's not the end of data collection. And we would want a scenario where every party, every arm of government, and even the private sector will continue to interact more with the NBS to supply data that is very relevant to economic development. That's very important. In terms of sectors, it's interesting that the several sectors have been added, from e-commerce to mining to informal sector, NSITF, NHIA, modular refineries, a blue economy, culture and tourism, and so on and so forth, which are quite significant additions. But you also want to ask I find it a bit difficult to pin down the specific contribution of these new sectors to the rebased GDP, because at 373, I sense that some aspects of commentators, some of them think that this 373 is really a significant jump in the GDP. I don't think so. I think that the work that the MBS has done is very, very, very conservative. That if indeed we have added these new sectors, and the other sectors in naira, not in dollar now, and the other sectors remained constant, or even if some of the sectors fell a little bit, I would have expected something more significant than 373. And that's the thing. I mean, I would have expected at least 500 billion trillion naira. That also adds to what Mr. Shitabe said, that look, the projection is for the economy to be at least 5 times as big. Even if we had twice as big, it's still something. We're on the way to somewhere, which also speaks to whether we can achieve $1 trillion, dollar economy or not. But the way I look at the 1 trillion is that look, it's an aspiration. If we wanted to do $1 trillion and we did 550 billion or 600 billion, perhaps it will be seen as a pass mark. But we have to take our data a lot more seriously and understand that, look, the economy is also really, really changing. For example, I note of course, the service sector still dominates the economy. And I think when I spoke with the MBS, I believe that some of the reason why that's so, where there was an increase in the contribution of the service sector to the GDP is because of the addition of some of the activities in the digital space, like, a lot of skits that Nigerians create. Somebody even wrote, who is in the data space, Professor, what's his name now, Belihua, wrote a book titled The Skit Economy. So we've had all of these things going on presently. 58 billion naira was paid to Nigerian content creators by Spotify in 2024 alone. YouTube paid $500 million to content creators in 2023, not only in Nigeria, but around the world. But they said that Nigeria number doubled in 2024. So there's a whole lot of the improvements that's going on around the economy. So, well, if I may answer your question, I would say that, in terms of government policy, this GDP informs the direction to a large extent. For example, in order to grow the GDP, given the marginal contribution of the manufacturing sector, that probably informs the monetary policy handlers, which is the central bank of Nigeria, that look, perhaps we need to work harder. We need to work harder at, it informs us that we need to bring down the interest rates a little bit. On the fiscal side, it is clear. I mean, contrary to what Dr. Babalola said, and she gave a lot of very, very interesting points, which I think we need to really further that discussion. I would like to get a contact to take that forward. But contrary to what you said, the truth is that if your GDP does grow in naira terms or in dollar terms, as it has now, in terms of the recalibration from the $188 billion to $243 billion, it actually opens the space for more borrowing. That's the truth. If you're not leveraging your GDP, it's at your own peril. It's like someone who is a finance manager of a conglomerate. You are sitting on huge assets and you don't know how to leverage your assets. The GDP is actually speaking, so to speak, about the assets of a country. The same way that Mr. Teslim Shitabe speaks about the physical assets of the country. If you don't know how to leverage it, you're on your own. So if you have a larger balance sheet and if you have a larger, GDP and at 243 and your new debt to GDP ratio has fallen to about 40% or 39%, allowed under the Fiscal Responsibility Act. But apart from the deficit, which is a yearly deficit that you can carry of 3%, you also have a space of up to about 60%, according to ECOWAS, 70% according to the World Bank, that you can move your debt to GDP level to. So clearly there's a space for more borrowing. However, I'm not saying that government will borrow. Of course, there's a borrowing plan that's already afoot, which according to the MTEF will be done. But clearly there's a space. However, we should also note that the government has approved the tax law. And that tax law is what will drive, the revenue. And in driving that revenue, that is what will further solidify the fiscal space. And I think that, as Dr. Teslim Shisabe said, perhaps the first time we're seeing the government to do something really tangible to recalibrate the revenue space, to say that we're not supposed to be collecting taxes from people who are really, really, really poor, or companies that are struggling to make 50 million naira in a year or something in terms of turnover. We're trying to shift the burden to people who can really pay. Look, even I'm a member of the Taiwo Idele committee. When we were deliberating, it got to a point where we said, look, even mere property taxes in this country, if it was done properly, can actually finance everything we need. But of course, Nigerians aren't at that level yet where people want to pay real property taxes, most of which is due to the state and the local governments anyway, not even the federal. But it'll open the space for a lot more revenue. But what I want to assure is that, yes, from what we have seen so far, we can do a lot better. And I think Dr. Faith Iyoha also mentioned that we see a scenario where people who should pay don't want to pay their own fair share. You can see even with this new tax law, even things like tax waivers have been blocked, that people will just, they can just move to a ministry, they talk to the minister, get tax waiver and all of that. All of that has been blocked. So I want to the people to give government some leeway and some, what do you call it now, benefit of the doubt that we're doing something about the revenue. And in doing something about the revenue, we also have the opportunity to leverage the balance sheet and the GDP a lot more beyond even selling off assets or bringing in equity on assets. We can do a lot more with this balance sheet. Let me make one more point and then go. Nigeria still came in at number 4 position in Africa. And when that happened, I had cause to say, let's look at it, because in research, there's what is called triangulation, data triangulation. When you look at one data piece, you say, what else can be economy of Algeria, and just looking at the population of Algeria, and Algeria has 2 cities, which is Algiers with 3 million people, and another city called Oran, which has 1 million people. And of course, GDP, if you look at it from an income perspective, even an expenditure perspective, GDP is equal to consumption plus investment plus government expenditure, less taxes plus net export. Meaning that consumption is a major function of the GDP. All the income paid to everybody on this platform today, listening to me, is part of the GDP. And therefore, population is a major part of the GDP, because people have to survive one way or the other. And so I doubt, even though Algeria has gas, Algeria has oil, and Algiers is more developed than many cities in Nigeria in terms of, infrastructure. But it's doubtful that the Algerian economy would have really overtaken the Nigerian economy solidly if we're looking at GDP the way I've defined it in terms of consumption, investments, and government expenditure. But again, it's an open sesame. There's still a lot to be achieved. I've asked the NBS to please let me see the contribution of these new sectors that have been added. I hope they come back to me, and I'll keep pursuing them on that. There's still a lot to say, but please let me not take too much of the time of your people. Hopefully, if you come back to me, but if you don't, no problem. Thank you very much.
Thank you. Thank you very much, Dr. Fasua. Yes, so time is up, and I'm literally being pulled by the neck right now because of time. Well, thank you so much for sharing that. I think it's great to hear that, the government doesn't intend to increase borrowing. Your stance on... Hello, everyone. Can everyone hear me?
Yes, we can hear you.
Can everyone hear me?
Yes.
Yes, we can.
Can everyone hear me? Just to confirm.
Yes, we can.
Yes.
Okay.
Yes, we can hear
Okay,
you.
great. Okay, great. So I think on that note, I will just say a big thank you to all my panel speakers. We've talked a lot about technology today. I guess I didn't appease the gods of technology, and that's why I'm having all of the hitches and glitches. But we would come back to take questions. So for now, I would hand over and yield the floor to Sadiq. But a very big thank you to all my panel speakers. We've had a very interesting and interactive, engaging conversation today. So I will come back up to take questions and comments. Over to you, Sadiq. Thank you.
Yeah, thank you very much, Mr. Amaka Nwaokolo. What a wonderful moderation that we have seen there. And thank you to our panelists for deeply sweating the data. We appreciate your contribution thus far. So I would like to welcome Professor Uche Owaleke, who is a member of the Presidential Committee of Fiscal and Tax Reform, to give a policy maker view of what the conversation we have had and some of the insights to share as it regards the rebased GDP. Over to you, Professor Owaleke.
Yeah, thanks so much, Sadiq. Good morning, everyone. Dr. Tope, I greet you. So I've been asked to speak to. I've greeted everyone. I've been asked to speak to this topic, policy maker view. As a matter of fact, Tope that should be talking about policy maker view. He's in government, but I want to thank NESG for giving me the opportunity. I'm actually representing Taiwan. He has asked me to do that on his behalf. So I am a member of the Presidential Fiscal and Tax Reforms Committee, as you had. I have a few slides to share. I have just a minute, so I want to share these few slides. Okay, you're already sharing from your end. You can quickly move on. I would have preferred to do that myself from here, but you can continue. Okay, fine. Now before I even start, hello.
Hi.
We can hear you now.
Yes, we can hear you
For a bit.
Can you hear me?
Yes.
Okay. Yes.
We can hear you now.
I would like to start by commenting let me commend the presenter, Dr. Faith, and all the panelists for the points they have made. As a matter of fact, what I'm going to do, a lot of things I'll be saying here would be mere repetition. At the risk of repeating what they have said, the point remains that you can't overemphasize most of these points. But a quick reaction to some of the things I heard before I proceed. The first is a comment by the moderator, Amaka. I think I just heard you say that Tope has assured us that the government wouldn't be increasing borrowing. I'm not too sure. Tope is here. He's still here. I'm not too sure that's what he said. He couldn't have said that because I'm sure all of us are aware that only recently the government, the National Assembly approved some loans that the government is seeking to get. But those loans are not, of course, loans meant for just a particular year. They are medium-term loans and loans that also cuts across all the tiers of government, both federal, states, and local government. Again, what's important to note about those loans is that unlike what we used to have, those loans, if you check the breakdown of those loans, many of them, or most of them, are tied to projects. So they are not loans specifically for, if you like, loans for recurrent spending. And it is in that regard that one would support, borrowing. Borrowing should be meant for capital projects and not for consumption. That way, we can guarantee, debt sustainability. The other thing I also had here, of course, that's from Teslin Shitabe. Yes, I agree that our capital markets, by the way, I'm a professor of capital market, but I'm not speaking today as a capital market academic. I'm speaking from the perspective of the Fiscal Policy and Tax Reforms Committee. But let me just say here, yes, when we talk about capital market, most times people concentrate on the equities market.
But the capital market is also about the fixed income. We have the bonds market, where view about our fixed income markets, where the government is playing a major role. I've always made that point that each time the government is borrowing from the each time the government is borrowing from the domestic market, okay, the right instrument should be used. That has been my point. Over the years, what have we seen? We have seen government borrowing using FGM bonds. FGM bonds have what we call discretionary feature, in the sense that whatever money that is raised can be applied to anything at all. So in the name of just financing budget deficit. But if the right instrument is used in raising FGM bonds, then there is no worry, in my view. Because if you look at our infrastructure stock to GDP and the huge infrastructure deficit we have in this country, if we must be realistic, we can't but borrow. But that is why I always argue that borrowing in itself is not bad, but what the money is used for is what's important. And the right instrument will help us. If you look at the structure of our current domestic debt stock today, you would find that FGM bonds is accounting for nearly 80% of that structure. Whereas if we had the infrastructure bonds component in that domestic debt instrument I talked about, representing just less than 3%. That's where you have the likes of Sukuk, for example, the likes of green bonds. So when you borrow using infrastructure bond, you can be sure that such money will be tied to project. And that's what I've been advocating, that there should be a shift from the use of FGM bonds to real infrastructure bonds, so that we are sure that whatever money that is being borrowed will be tied to projects. The second one too has to do with external debt. The reliance over the years on commercial external debt again has not helped us, particularly our debt service to revenue ratio. If we had concentrated more on concessional borrowing, that would have been a lot better for Nigeria. And if you check the recent borrowing that was approved by National Assembly, all of them, virtually all, virtually all are coming from the concessional source. Again, that is why that's, for me, that's commendable. In the past, we seem to have relied so much on Eurobonds, and which are very expensive, and again, which are not specifically tied to projects. So that is what I have to say with respect to the the bit about the capital market. All I'm saying here is not about equities. Yes, the equities market today, you could say, is not reflecting the economy, the way the economy is structured at the moment. Agri stocks, just as Tope rightly said, are not very visible, and that's because we have just two major companies listed there, Okomo and Presco, two major ones that are there. So what would you expect? So we are therefore saying that for the capital markets, the equities market, particularly the main boss, the NGX, to be in a position to reflect the economic performance, there should be more companies, listed on the market. And that also brings me to the issue of, trying to formalize as many, particularly the informal sector, as possible. The agri value chain, the ones that are also within the informal sector, by the time you formalize them and you allow them, give them the opportunity to grow, and eventually begin to think of the stock market, that is when, it's only that time that you can begin to say that the market will be reflective of the economy. The other thing that is closely tied to this is also has to do with investments. I think Tope also mentioned it, and I agree that investments in this country should, talking about foreign investments, the focus really should be on foreign direct investments, not on foreign portfolio investments, because foreign direct investment is the one that will help to create jobs. It's also the one that will, is such that when you now say GDP is growing on account of maybe investments, the common man can feel the impact, as opposed to foreign portfolio investments. Okay, today, if you look at the recent capital importation report released by the National Bureau of Statistics. Yes, foreign investments grew in Q1 of 2025. By over 60%. Today we have foreign investments in Q1 at 5%. But if you disaggregate that foreign investment that came in Q1, it is more of portfolio, accounting for over 92%. So foreign direct investment element there is just 2.22%. And foreign investment is actually the one that brings permanent capital, okay, as opposed to the portfolio, what we call hot money. So if we have to grow GDP, okay, on a sustainable basis, again, just as Tope argued, we need to focus more on the direct investment as opposed to the portfolio investment, which in any case can also be quite destabilizing to an economy, particularly when these investors exit. Having said that, again, as I said, I'm supposed to be talking from the point of view of the Fiscal and Tax Reforms Committee. If you look at what the numbers are saying, maybe you should go back to my slide, or if you allow me to share, so I can I share from my end? Hello, Amaka, can I share from my end here? Or you put it up again? I just want to...
I think it will be better we share from our end. The network from your side is a bit
go ahead.
low. So please share from here.
Okay, go ahead. Okay, go ahead, please. Go ahead, go to the numbers. You realize that we have today, services sector is still commanding the major accounting for the bulk of GDP. It has increased from 51% that we had previously, so about 53% now. The agri sector has also picked up in terms of the contribution to GDP. I think agri sector is now around 26%. And then you have industry, however, has declined. Okay, so that is the shifts that were. And if you check the Q1 GDP report by the National Bureau of Statistics, the economy, we were told, grew by 3.13% in Q1. But look at the growth drivers. Okay, again, the services sector. Okay, agri sector has not been, if you like, has been underperforming. Ditto for the manufacturing sector. So what do these numbers now tell the policymaker? Okay, it is to focus attention on the, if you like, labor absorbing sectors.
Prof,
yes.
I am so sorry to interrupt. I understand that my time is up. So please, if you could just wrap up so that we stick to time and we let everyone go in good time. Thank you so much. Thank you, Prof.
Okay, so, well, yes, you see, because I'm speaking last, you took the whole of my time. Well, in a nutshell,
we apologize. We apologize.
Yes, the committee made a number of recommendations that we think will, of course, which have now been captured in the Nigerian Tax Act. Okay, that if well implemented, will go a long way to incentivize, particularly the informal sector, because we believe that part of what we need to do to formalize the informal sector is to help them with incentives, which is why you have these, avalanche of, exemptions, an avalanche of waivers. Today, small businesses turnover of less than 50 million, have been exempted from companies' income tax. The same exemptions too for VAT, particularly for small companies engaged in the whether they are in agri sector or health sector in particular. Their products have now been zero rated. So a number of things we have in that tax law today are meant to, as I said, grow the economy. So they are pro growth and they are pro development. Let me end on that note. I'm sure you can share my presentations with the participants so that they can see some of the things I said there. Thank you.
Thank you so much, so much, Prof. Thank you.
Thank you very much, Prof. Walike, for your intervention. In order not to waste our time, we'll move to question and answers. I'll hand over to Ms. Amaka Nwaokolo to lead that session. We'll look forward to participants to ask questions. Over to you, Amaka.
Okay, thank you. Thank you very much, Sadiq. So I have been sent 3 questions. These questions are directed to Mr. Tope. So your prognosis for interest low compared to other players. Welcome to Mr. And then I have one more from Michelle. Michelle also says, how can we mobilize capital that is here in Nigeria to mobilization? FDI is great, but for the long term. So, Mr. Shobe, you have the floor.
Thank you very much, Amaka.
Sadiq,
Unfortunately,
could anyone confirm if we
your
still
network
have
seems to
Mr.
have
Shobe on
frozen,
the call?
so I didn't quite hear the first question. Could you kindly repeat it?
Oh, okay. I apologize. Can you hear me now?
Yes, I can.
I will just turn off my video. Can you hear me now? Okay.
Yes, I can.
Okay, great. So the very first question says, okay, great. The first question says, what's the prognosis for interest rates, right? Private credit from the presentation is low compared to other countries. I suppose that the high interest rate impacted by inflation plays a significant role in keeping credit low. So in essence, what's the prognosis for interest rates? Number 2, how can we mobilize capital that is here in Nigeria towards industrialization? FDI is great, but how about funding that leaves here, meaning leaves Nigeria and goes abroad? How can we mobilize local capital for the long term? So those 2 questions from Michelle. And then one more question for you from Joseph. Joseph says, are you in any way suggesting that the contribution of the agri sector to the GDP is invaluable because most of them are not listed on the Nigerian Stock Exchange? Okay, that's a strong one. So over to you, Mr. Shetobe. Did you get all the questions clearly?
Yes, I did get them clearly. Let me start with the first question that talked about interest rates. Interest rates are very important tools of macroeconomic management in every economy, certainly. However, I must say something very quickly here. I am not too sure that the central bank's monetary policy rate is reflective of commercial interest rates. And therefore, as a tool for managing credit, I am also not too sure that the central bank's monetary policy rate is that crucial. And let me just put it within this context. The commercial rates are functions of demand and supply. The monetary policy rate is an indicative rate at which banks do transactions with the Central Bank of Nigeria. If you've noticed, while deposit rates tend to remain flat over an extended period, and you can try this with the data available and you'll see what I'm saying. And it's not only in Nigeria, it's global. The United States is in the exact same situation where deposit rates are fairly low, but lending rates are high. So the spread, the net interest margin, if you check the various annual accounts of banks, net interest margins have grown consistently over the years. Is that a bad thing? Well, maybe not. What is important really is that we've got to tackle the problem of foreign exchange. And that's why I'm saying that the FDI is very important in managing the Nigerian economy. It's not the exclusive silver bullet that will solve our macroeconomic problems. However, bringing in dollars into the system will do something. First, an appreciation of the Naira. As the Naira appreciates, we expect to see domestic inflation rates gradually fall. as domestic inflation rates fall, we also expect to see nominal interest rates fall. And with those lower nominal interest rates, we expect that it will be easier for manufacturers and people in services to be able to access credit at a fairly competitive rate, making them more competitive in terms of production and hopefully export of manufactured goods or services from Nigeria to the rest of the world. So interest rates are a critical factor, yes, but I am not too sure that the data seems to support an argument where what the Americans would call the federal funds rate, or what we call the monetary policy rate, is that crucial in commercial markets. What would have happened really would have been if inflation rates had gone down, as it is going down steadily, just slightly over 22%, we would have seen a gradual expansion in primary money supply, and what we call M1 and M2. And therefore, we'll see that the economy, the GDP, will actually grow because interest rates are much lower. That is not happening now because of the structural challenges we have within our system. And these structural challenges are creating the distortions that makes it very difficult to see lower interest rates in the very short term. That's my straight answer to that question. Can it be resolved? Yes, we need to do something about getting money into the system, which ties up to the question of localization of capital. That's excellent.
Okay.
I agree with you.
So Mr. Tope, sorry to interrupt. We need to move the pace very quickly
Okay, so
on the other two questions.
very quickly now, localization of capital. Yes, I agree totally that we need to mobilize local capital. But then again, if you check the issues by domestic banks in terms of their equity issues to meet the CBN recapitalization goals, we find that most of them are oversubscribed, which means that we have enough domestic liquidity to invest long term. But do we have the incentives to move? And and most of these companies, they're not listed. So I can't establish a value for their equity. So I don't know whether it's a good investment or a poor investment. So like Professor Waleke rightly pointed out, we've got to find methods by which we can encourage some of the informal sector to become formalized so that they can raise capital, because they can raise capital within this market. And then the last one that on the agricultural contribution. No, my question is simply this. If we want to develop the Nigerian economy with the agricultural sector making such a huge contribution to GDP, we've got to incentivize that sector. One way to incentivize it is to move them from the informal sector to the formal sector, where they can mobilize long-term funding. The problem we have is that most people want short-term funding at very high cost. And what I'm arguing is that, look, let's see how we can raise equity. So rather than go to the money market, we're going to the capital market to raise long-term funding. Equities are patient, what we call patient capital. Equities will wait for your business to mature before investors start demanding dividends. And that's the kind of capital we require in the current situation we're in. Thank you very much.
Thank you. Thank you so much, Mr. Shitabe, for your responses. And I hope that both Michelle and Joseph have the answers to their questions now. So very quickly, I'm going to bring up my panelists to just give closing statements, and it will be a wrap from our end. So Dr. Fasua, do you want to set the ball rolling with a closing statement? Very brief, please. We have 30 seconds each. Thank
very
you.
Quickly. I'll just rifle through a few things that I missed out. One of them is, look at my statement on maybe property related fees or taxes is underlined by the growth of the real estate sector in the new GDP. I want to also look at some of the things that fell out of the GDP. For example, that the educational sector fell. Some of this will need to be reinterrogated because you can see that even British secondary schools are now setting up in Nigeria. Even it was said that the car manufacturing sector fell and to $131 million from $360 million in 2013. I find it incredible as well because we have about 7-8 car assembly companies in Nigeria presently, at least up to 2024 when the data ended. equally that there was no change in Nollywood. So
Dr.
essentially, I think no, let me just say that essentially my key concern is that is back to data, that we need to do a better job on our data, but it can't be left for MBS alone. I want to urge for continuous interaction and interrogation of the data. According to what Dr. Babalola said, you know, the heuristic factor, the cognitive factor is always there. We just take these things and believe that it's a holy grail, but it's not. It opens, if we know that data is the new money and the new oil, we need to continue to interact. Thank you very much for the platform. Cheers.
Thank you. Thank you very much, Dr. Fasua. So speed dial, we're moving to Dr. Babalola.
Thanks, Amaka, and thanks for the excellent facilitation. Just to reiterate that budgets are for the people. Government is just there to execute this budget on behalf of the people. And so citizens must be involved in the design of the budget, in the preparation, the implementation, the monitoring, the evaluation, up to the audit process. So enough of the tokenism, because citizens are the primary stakeholders of government. And then just to address the comment Dr. Fasua made about fiscal space, higher GDP doesn't automatically create additional fiscal space, right? And allow government to borrow more, because you're also constrained on the other side by your rising debt service to revenue ratios. And we can see that because we rebased GDP, we're now seeing that our revenues are not even growing as fast as our GDP. So government has to do more work to create the proper framework for example, taxing citizens, corporations, MSMEs in a fair and equitable manner that involves citizens in decision-making on how fiscal policy is managed in Nigeria. Thank you.
Thank you. Thank you so much, Dr. Babalola. And then we move to Dr. Meshagun. And from Dr. Meshagun, we're coming back to Mr. Tope.
Thank you very much. And my take home is that we have seen that the rebased GDP provides a more accurate and maybe an optimistic view of Nigeria economic size. But we also know that it exposes structural weaknesses in public finance. So because you see that the debt appears to be more sustainable, and that's what Dr. Fasua has laid credence to, but actual fiscal risk remain. So we have to be a bit cautious. Revenue and expenditure ratios are also very low, indicating limited fiscal capacity. Okay, so because of that, we need some policy reforms in the area of how we can widen the tax net, improve tax efficiency, then strengthen the debt management framework, as well as align fiscal planning with the rebased economic structure. It will be very, very important we take cognizance of that going forward. Thank you.
Thank you. Thank you so much, Dr. Meshagun. And so now we have, last but not the least, Mr. Tope.
Thank you very much. My last thoughts are quite simple. Nigeria needs to rethink its fiscal arrangement. It needs to take a view that emphasizes the balance sheet as well as its income statement. As Professor Nwaokolo has rightly pointed out, the capital market is not just about equities, it's also about debt, but we need the right kind of debt. The earlier we do this, the better for the nation, the better for employment, the better for the welfare of the citizens. Thank you very much.
Thank you very much. On that note, I want to thank.
I have closing thoughts as well.
On behalf of everyone, your closing thoughts. Okay, Prof, closing thoughts.
Yeah.
Prof, you have 30 seconds.
Thank you. Yes, thank you. Well, it's to say the rebased GDP has revealed, has made a number of sectors visible. And that means, of course, enlarging the revenue base of the government revenue potentials. But beyond the expanded revenue potentials, for me, is also the issue of spending quality and spending efficiency. And I want to let this audience know that the Committee on Fiscal Policy also made recommendations with regard to spending and with regard to debt management. So what you have seen in the tax law is just the revenue aspect. The recommendations on spending and debt management are also going to be on the table. Thank you.
Thank you. Thank you. Thank you so much, Prof. That was succinct. Thank you so much. And so on behalf of everyone at the NESG, I want to thank deeply, thank all our speakers today. Thank you for your time. Thank you for sharing of your knowledge, your expertise. We've had a great conversation, a lot of food for thought, a lot to chew on, a lot to process, and it's because you made your time available and shared freely. We thank you very much. On that note, I would yield the floor to Sadiq, I think, to welcome our speaker for closing remarks. Thank you, everyone.
Yeah, thank you very much, Amaka Nwaokolo. It's been a very insightful session and expository, I must say. Thank you to our speakers. We appreciate this. I'll now call on Dr. Olusegun Omishakin to give us the closing remark.
Yeah,
Dr. Olusegun
thank you.
Omishakin
Can you hear me?
Okay.
Okay.
Yes, we can hear you.
Okay, thank you very much. Thanks again for this opportunity. I think you all believe with me that this has been a fantastic conversation so far. I think I wish we could also have a more platform where issues like this will be raised, and this type of quality panelists will also be invited to have deeper conversations around data, policy, inclusive growth, and so many other macro and micro policy issues that we all have spoken into. I want to use this opportunity on behalf of the CEO of the NESG, who of course joined this meeting, but he had to also quickly join another meeting around 11:40 or so. So I'm speaking on his behalf and on behalf of the management and board of the NESG for this privilege and the opportunity our audience and especially our panelists and our special speakers today have given us. We appreciate your contributions. We feel we should continue, but again, we know that the time has gone, so we want to say thank you very much to our presenter, fantastic moderator, and every NESG team for every team member for everything you've done to see that we conclude on a very solid note. Thank you very much. I believe it's so important, as we have said, that data is not just what we see and we just live with. It's something we need to also explore, look at the implications and look at how we can all move the country forward. So we are so much happy that you've made these presentations, and we pray that when another opportunity comes, we'll reach out to you and we'll love your presence also, so that we'll continue this conversation at the NESG. Thank you very much for everyone who has participated, and do have a lovely day ahead. Thank you.
Yeah, thank you very much, Dr. Olusegun Omishakin. I want to use the opportunity to say thank you to everyone that joined the session. I would say do enjoy the rest of the day.
Thank you all, and bye-bye.
Thank you.
Thank you. Bye for now.